Hey guys, Dan Latrella.
And Annie Latrella.
How are you guys? Welcome to Dan's Mortgage Bites.
Hey, ooh, Dan, what are you sporting there? Versace's or Gucci's?
Not Oakley's either. These are not prescription, guys. These are for people that work on homes to protect their eyes. So basically, today's video is going to be about the 203K FHA/rehab construction loan. Wait a second. Sounds kind of funky. Sounds kind of crazy. When you talk to your local brokers/realtors out there and attorneys, what do they tell you about this loan?
Don't talk to me. I'm glazing over. Don't want to hear about it.
You can't do that loan. You don't even qualify for that kind of loan.
Banks aren't doing those anymore.
And again, these are all lies and excuses on why they tell you this. Because one, they fear the loan. Two, they don't understand it. So today's video is going to be about why you should do it, the two different FHA construction products, and at the end we'll give you a great example. So let's start off with first, Annie. Why should I do this loan?
Here's a really good reason. How about that house that you just went to go see with your agent? And it was because it was in a great neighborhood and it was priced really, really low. You're like, yeah, this can't be true.
It's perfect.
And sure enough, you walk in it because the pictures that they showed were not the pictures that you saw when you walked in there, because you had gold and you had brown tile in the kitchen, you had old cabinets, you had orange shag rugs. Those bathrooms were antique, but like not the kind of antique that most people are interested in. And you're just like, okay, what am I going to do? I love the house in the sense where the neighborhood is.
Exactly.
I can't afford to fix this.
Who can? So with this loan, we can show you a house before and after and build you or fix the house to your liking. So that's one.
That's one.
Two.
Right.
How many people have babies in this world, Amy?
Oh, everybody.
Some people are having a tough time selling their house right now.
Or they don't want to sell because they like their neighborhood, but they just are running out of room.
So instead of selling your house to buy your dream house, how about we build your dream house within the house you already own? That's option number 2.
I like that.
What's option number 3 now?
What about all those foreclosures and short sales that say you have to have cash to get in there because it just doesn't need any guidance?
Because it's missing piping, there's broken windows, who knows?
It's a nightmare mess.
So with this loan, again, we can build a house to your liking as long as you qualify. And now all of a sudden, instead of buying the house cash, who has cash, we basically build it to meet FHA
So that way,
standards.
not only the investors can actually benefit, so can we.
Which is great. So let's talk about it. The first loan I want to talk about today is the Streamline. Give them and talk about the Streamline a little bit, Annie.
Streamline's a great loan. It's quick and it's fast. And one of the benefits is they give you $35,000. It's a lot of money.
Which you can do a lot with $35,000, guys. You don't have to spend $35,000, but what Annie was saying is the limit is $35,000 on this loan.
$35,000 to spend on what you want that's non-structural.
Yes.
Okay? So that doesn't mean you can go to the jewelry store, ladies. That means you have to spend it on things like paint. It means like if you want to fix that kitchen, you want to do the cabinets, you want to do the counters. If you want to get all energy efficient type of appliances, you want to get those big, big refrigerators.
The Viking ones, I think.
Yeah, Viking or the big Wolf stoves, if that's what you want.
Yeah.
But you can do that. All right? You can go, and if you have to do the things like the septic tank, which is no fun, but you can do that. You can do gutters. You can use it all for that. There's a 10% contingency on it.
Which basically, what's that mean? Basically meaning a lot of times when we do construction, a builder says the cost is going to cost this. The reason why the bank does a 10% contingency, guys, is because things come up. Maybe there's a permit we missed. Maybe there's something we missed throughout the deal. So the 10% contingency is within the $35,000. The nice thing also about the Streamline, guys, is that there's no FHA consultant.
That's right.
What's an FHA consultant, Annie?
Well, the FHA consultant's really there for your benefit, and he's a really good guy.
But he's expensive.
Well, not that expensive, but he can pay a minimum of $800, so it's $800 that you're saving.
And the nice thing about doing the Streamline is, like Amy said, it's quick and it saves you time. It can do really great to your property. The next thing we're going to talk about is the full 203K. Amy, what's the limits on that for how much money you can get?
The sky.
The sky must be nice. Wait a
The sky's
second
the limit.
Come on now, Amy.
Certain limits. You have to qualify, so it has to be within the guidelines
Okay.
you qualify for. And also the county that your loan is actually being written in. So you're going to actually go onto the website.
You go on HUD.gov, which will basically, you can look in your county, wherever you live, and it'll tell you what's the most loan limits you can borrow. So now let's talk a little about the full 203K. We already know that, one, the sky's the limit as long as you qualify for it and you meet the limit. Now, also, like Annie's on the Streamline, you can do a lot of the same work, but on this one, you can now add that addition for your new daughter or son, or that dream jacuzzi bathtub that you deserve.
That's right. Deserve. I like that. I deserve that. So anyway, the 203K is nice. You still have a 10% contingency, so if you use it, fine. You don't have to, or you don't.
And if you don't use it, wait a second, they reduce it off your loan amount.
Right.
So you get, so it's just there to protect you as buyers.
And you will have the HUD consultant. Now, the HUD consultant, again, is a minimum of $800. He will come and he will check to make sure that whatever the builder is charging you is actually within the guidelines and that you've met the guidelines for HUD himself.
So basically, we want to first make sure that the house meets HUD standings, which he's going to check. And second thing he's going to do is check to make sure the builder's not taking advantage of you, to make sure the builder didn't give you an estimate that was wrong. So he's there to protect you, so it's actually really a good thing. Now, so these are some great examples we can basically do with the two different kind of loans. Now, last but not least, let's give you a great example of, let's say I got a buyer.
Okay.
He can afford $250,000.
All right.
Okay? So let's just throw out a number. Give me, I don't know.
Let's just say he finds a house
for $200,000.
Okay.
Okay. So what is he doing? What's a $200,000 loan today for FHA? Just the mortgage.
It's about $1,000, $1,020, $1,050.
Okay, sounds good. Now let's just say we decide that me and my wife want to all of a sudden do all these additions, and we go to Home Depot and open up a $50,000 credit card. Even though it's probably about 18%, let's say it's 10%. What's that payment going to probably be around?
It's about $670, $660,
Exactly.
something like that.
So now you're talking $1,600, $700 a month.
Wow.
Now let's just say we find a house for, I don't know, $200,000.
All right.
But now instead of financing all the money into a credit card, we finance it into the mortgage.
Well, that's a good idea.
What's our payment going to be?
Well, it's going to be a much lower interest rate,
Which
and it's a tax write-off on top of that. But
Exactly.
without even talking about that, without taxes and without insurance, we're probably looking at, I'm going to say about $1,300, $1,320, something like that.
So now all of a sudden, you have your dream house, you don't have a credit card that's maxed out, and you're borrowing at a great interest rate. Now another thing we didn't tell you guys is, let's say your house, you're doing all this work on the construction loan, okay? What can you do for 6 months, Annie, while I live in your house, in your basement? What will the bank allow you to do?
They'll allow you to put 6 months of your mortgage payments into your mortgage, and so therefore...
So you don't pay a mortgage for 6 months while
How
your
great is
dream
that?
house is being built.
And you get to live with Mom, and she gets to cook for you.
How great is that, guys?
I love
Now,
it.
I know we only went over some of it today.
Very briefly.
I know there's going to be a lot of questions. There's a lot of, we'll be more than willing if you add a comment to the bottom of our page or contact us. Please, we'll be more than willing to help you guys explain to you why this loan is so great. I really hope you enjoyed our video today, guys. And as always,
Have a great day.
and thank you very much for your time.